Joining us from Mumbai is Renuka Ramnath, founder and chief executive of Multiples Alternate Asset Management. Renuka Ramnath, thanks very much indeed for joining us and bearing with us. I know we had a couple of technical issues, but I want to just get your views to what you, as somebody who's in private equity, want out of the budget today and where you can make a difference in actually giving India back its growth momentum.
Well, we will be very pleased if we hear some clarity with respect to the taxation on investments. And as a domestic player, we would also be very pleased if we got a level playing field with our international counterparts with respect to the regulations for making private equity investments in India.
Well, what so far has been the track record of companies such as yourself in indeed helping to work where other people haven't gone in before and actually turn companies around and add to the India story?
Well, I think the biggest success story for private equity has been in bringing new businesses, new enterprises, new entrepreneurs into the forefront and creating wealth in manners that didn't exist before. I think we will continue to work on that part in terms of bringing in entrepreneurs who are not big today but have the potential to create a lot of wealth for themselves and other participants and create a lot of jobs, particularly in the Indian economy.
Well, with interest rates where they are and relatively high compared to the rest of the world, tell me something, how does that affect your business? How does it affect deal flow as well? Because we've seen many corporates suffer under the strain of these high borrowing costs.
That's very, very valid. I think that generally the economy has suffered from lack of investments in highly capital-intensive sectors because borrowing at the current interest rates will not make those projects viable. So a lot of investments have gone into services business where you are able to grow your businesses in small modules and rely more on equity capital than on debt. And we've also been very particular not to get into high leverage situations. So I think that for greater capital expenditure to happen from corporates in India, a much more mellow interest rate environment is an absolute necessity.
Okay, well, let's also get your views here on just generally, do you have any plans to raise money? And if you decided to raise money, which is the best plan? I mean, do you actually go to the market in India, or do you actually go abroad where you can get the cost of borrowing at a fraction of the cost?
Well, with respect to private equity capital, I would say that the domestic availability of capital is very, very tiny. Almost all of the private equity capital is raised abroad. But with respect to leverage in Indian companies, I think our entrepreneurs have become a lot more conscious of the risk that they are contracting on the mismatches between the currency in which they are earning their revenues and the currency in which they have their liability. So I think that the historical experience in terms of going abroad and doing dollar borrowings have not been great across the board because of the currency fluctuations. So there is a greater focus of risk management, and therefore the answer to that question is not straightforward that you would go abroad for raising money. I think a lot of enterprises would like to raise leverage using Indian rupees only.
Renuka Ramnath, very quickly, where are you finding opportunities to invest right now?
The beauty about India is that the opportunities exist in a very wide spectrum, and you could start with very young companies which are addressing the internet space and go all the way up to very large infrastructure projects. But generally, I would say that investments in healthcare, financial services, infrastructure-related services have been very, very attractive in recent times.
Renuka Ramnath, thank you so much for joining us there from Multiples Alternate Asset Management.